Hi, this is Shay Joyce, investment analyst at PlanPILOT, and I'm going to spend a few minutes walking through one of PlanPILOT's investment summaries, which are a core component of our clients' investment oversight. The purpose of this exercise is to provide a better understanding of our quarterly investment review process and the way that information is captured in our reports. Please understand that the purpose of this presentation is not to provide you with specific investment advice. Rather, it is to inform those that may be new to PlanPILOT's investment review process or those that would benefit from a refresher on what our reports entail. Without further ado, let's get started. The report begins with an executive summary page that we like to use as a housekeeping check. This page serves two purposes. First, it addresses at a high level how PlanPILOT's scorecard system works, and second, identifies any of our clients' funds that were flagged by our scorecard and warrant further review going forward. Any funds that fall below the 60% threshold on our scorecards get added to our watch list. Towards the tail end of the report, we'll walk through the actual scorecards in greater detail. This page gives a quick snapshot of the plan at the end of each reporting period, breaking down information by investment asset class or category. The left chart shows the plan balances as of the end of the period, and the right side captures the contributions made to the plan's investments during the reporting period. This information is intended to be insightful in that it provides into how participants are actually engaging with the investments offered in the plan and how that can change over time. This next page we like to sometimes refer to as a market quote, and it kicks off a few pages of broader market commentary that we like to include at the onset of the report. Other than this being the most colorful page in the report, we like to include this chart because it really speaks to the benefits of diversification across asset classes. Its inclusion is not necessarily driven by value of following the chart too closely, but what you can see is that historically there hasn't been too many patterns of performance. The top performing asset class of 2020 will most likely differ from that of 2019, and participants will always be best served by thoughtfully diversifying their portfolios. The next few pages of the report cover how the markets did during the period in review. We like to include this review of the markets at the beginning of the report because it gives some pretty good context that will help you better understand how the actual investments in the plan menu performed. What you see on this page is the darker shaded bars are capturing the quarterly performance for most of the major categories which we follow, and the lighter shaded orange bars capture the full year-to-date performance for those same categories. This next page is the same full year and quarterly performance focused on the specific sectors of the U.S. equity market. The breakdown of individual market sectors is insightful because you get to see how the more cyclical or secular sectors perform in relation to one another. In this example, the typically more cyclical, risk-focused sectors outperformed like information technology. The next page is the same snapshot, now covering the individual sectors of the U.S. fixed income market. The Bloomberg Barclays U.S. Aggregate Index is shaded in gray because it has commonly been referred to as a good proxy for the performance of the fixed income market as a whole in the U.S. The trends observed specific to bond category sector leadership on this page provide some foreshadowing for individual investment performance in the coming pages based on their exposure to various fixed income market sectors. Then, in the chart below, it shows the directional change in U.S. interest rates for the current period relative to the previous period. The next few pages of the report cover the actual performance of the investments in the client's plan, comparing that performance to relevant benchmarks and peer groups. These snapshots do include a quarterly performance update, but are otherwise longer-term focused. We are very intentional in emphasizing longer-term performance in these investment oversight reports, as plan investments, especially in the context of a retirement plan, are intended to be long-term investment vehicles. Accordingly, our oversight is predominantly focused on assessing whether plan investments are adequately adding value over the long term. To follow and interpret this table, I'm going to briefly walk through the money market category as an example. Looking at the leftmost columns, they capture how the funds actually performed versus their benchmarks and peers, and just to the right of that, you have a ranking to show how they stacked up versus their peer group for the quarter. As an example, if we look at Vanguard Federal Money Market Investor, we can see the fund returned 0.43% for the quarter, ranking it in the top third of its peer group. A lower ranking score in this case means that the investment finished near the top of its peer group, whereas a higher score closer to 100 shows that the fund performed near the bottom. Below the investment now, you can see how it performed against both its benchmark and average peer, and in this case, the fund outperformed its benchmark by 4 basis points for the quarter. Just to the right of the quarterly performance column, 3-year, 5-year, and 10-year annualized performance is captured. As I mentioned earlier, we like to see that an investment has performed strongly not only as of recent, but over the long term. In addition to the return rank, standard deviation and Sharpe ratio are also displayed. Both are important investment measures and we believe should be actively monitored as well. Standard deviation is an absolute measurement of a fund's volatility, and Sharpe ratio brings risk and return together to measure whether a fund is generating an adequate amount of return for the risk it is undertaking. We like to see funds that have standard deviations lower than their peers and category average, and Sharpe ratios that truly showcase extra returns for each extra unit of risk that the fund is taking on. On the next page, we are looking at a very similar snapshot, this time exclusively focusing on the plan's target date funds instead of the core menu. The top left charts capture the series weighted average manager tenure as well as success ratios. We look at the entire series of investments taken as a whole when evaluating a target date series rather than looking at the individual vintages of the series. The underlying allocations of each target date vintage differ drastically, so a more prudent measure of performance is to evaluate the series as a whole. The first page of the target date snapshot covers only series level information, while the next pages look at each vintage individually. Success ratios capture the percentage of funds that survive and outperform the category average over a 3-year, 5-year, or 10-year time period. The series weighted average manager tenure is the weighted average of each of the underlying fund manager tenures. The chart just to the right of that captures the current 5-year tracking year and number of holdings within each vintage in the series. Similar information is also shown for each vintage 5 years ago in order to compare historical results with current. Lastly, the performance snapshot at the bottom shows the performance of the 2 largest holdings within the target date series. The next few pages of the report show the actual performance for each vintage or year of the target date series. The same information and ranking metrics that were shown earlier in the report for the core menu are shown here, with one key difference being the Sortino ratio. Turning the page to the first set of scorecards, we can see the scorecard for the passively managed funds in this plan. An index fund is designed to track a specified basket of investments or an intended index and follows a certain preset of rules to do so. Passively managed funds are graded on their excess returns and tracking year to their respective benchmark indexes, as well as their expense ratio. A fund that has low excess returns and tracking year shows that it is closely mirroring its benchmark and successfully delivering on its intended objective. On the index scorecard, we like to see the lowest numbers possible. Funds that have both low excess returns and fees and also tightly track their benchmark will receive a pass grade on the scorecard. The next page shows the scorecard for the actively managed funds on the menu. The chart at the top of the page details the 13 different criteria we look at and the threshold criteria for each. Below is the actual scorecard with a numerical rank for each of the criteria and a total score in the rightmost column that is a weighted aggregation of scores from the 13 individual criteria. As I previously mentioned on the executive summary page, any funds that fall below the 60% threshold on our scorecards get added to our watch list. Our scorecard is organized from lowest score to highest. So if you look at the top of the scorecard, Craft Social Choice was the lowest scoring fund for the quarter, and American Funds New Perspective and Principal Real Estate Securities at the bottom were the highest scoring funds. Each of the criteria have their own numerical value or rank and a color assigned to each. Green indicates that the fund passed the minimum threshold for the criteria. Yellow indicates that the fund passed the threshold but came close to failing. Red indicates that the fund did not pass the minimum threshold for the respective criteria. We believe that a lot of value can be derived from our scorecard, particularly the emphasis it places on evaluating risk and returns over a long time frame. Evaluating performance through this lens prevents shorter-term challenges from materializing on the scorecard and displays a more accurate score for the long-term investment vehicle it's intended to be. The next page shows the last scorecard in the report for the target date series. Similar to the active scorecard we went through for the core menu, this one takes a look at each vintage of the target date series. The same color coding and grading system is used for each of the criteria, except now there are a few different criteria presented than were in the active scorecard. Furthermore, the scorecard is now organized by investment name instead of being ranked lowest to highest by total score. Results for each vintage can differ based on the equity and fixed income exposure for each fund, so we chose to assign a rank to the entire fund family itself. The last page of the report is just a numerical recap of what we reviewed on the pie charts at the beginning of the summary, further breaking out the information by individual fund. Each investment is listed on the left side of the page, organized by the risk of its asset class. Investments that are perceived to be lower in risk are at the top, and those that are perceived to be riskier are at the bottom. The rightmost columns show the actual dollars and contributions for each investment, along with a percentage to show how much that fund makes up total assets or contributions in the plan. In closing, we hope the information presented today helps you to better understand and interpret our investment reports, and we are looking forward to reviewing a report specific to your plan with you in the near future.